Okay, let's say a little prayer before we start. Thank you, Jesus. Thank you, Father. Oh Lord, we ask that you take perfect control of today's talk show in the name of Jesus. Thank you, Father, because you are good. In Jesus' name we are prayed. Amen. Okay, so today we'll be looking at a crucial topic. Find the perfect order block. It is very important for us as a technical analyst for us to be able to understand where the market makers are going to place their orders. And that is what give birth to today's topic. And I hope everybody here are traders. And I just want you guys to open up your minds because today we'll be talking more of a crucial topic as a technical analyst. Okay, our speaker is here. Welcome, sir. Mr. John, welcome. So that's what today's topic is based on, how we can be able to spot out the right order block in the market and also the psychology. When we spot out an order block, it takes time of waiting and of patience because precisions is what comes with skills, and also our patience is our power. So today we'll be looking at how we can be able to spot out the right order block because there are many blocks there. And when you take a retail's book to read and you are listening to you are hearing something about order block, you just hear the last bearish candle or the last bullish candle, that's the order block. No, there are some principles, there are some things that comes together to make an order block. So today's talk show, we're going deep into it, and so that we can be able to spot out the right order block in the market. And we have our speaker here, Mr. John, the founder of JayForexHouse. We welcome you to the talk show. Can you have the floor, sir?
Right, thank you very much. Thank you. Okay, so today's class is going to be with a presentation. So I believe he's also going to be on system too. So I will show you guys some stuff on the chat while I break down, the concept of order block or the idea of, an order block or the psychology to the approach when you're trying to look for an order block. You understand? Because I think everybody has their own understanding from, trading is not something you have a manual of approach to how you study, to how you make your research, or in school we have the basic 1, 2, 3, or the syllabus we follow. So every knowledge has a stage, but there are certain people who knew about order block from ICT method, certain people knew it from baby pips, and different explanation of what the ideology of another block means. So I want that to be known, and then I will give you guys my own perspective. Okay, I'm not saying anything is certain because this is trading. Okay, but at the same time, this is how I've been using the concept of order block for a long time. And for those of you who are following me for a long time, it's not going to be sounding new. It's just going to be refreshing and also giving you some insights to how you should follow up, moving forward. Let me proceed with the ideology of another block with the psychological aspect, since that has to do with reasoning. So let's discuss. And what I want everybody to understand is that, first of all, I'm not the one hosting the event, so the topic is something that naturally I won't, put out that concept of saying the perfect, trading is all about prediction, so there's nothing perfect about it. But at the same time, I think it's also captivating as well because a lot of people don't know. And even if they do, they just, feel ignorant enough to think that maybe they could find the perfect one. So whenever they hear that concept of perfect, they think that is the one, So I did like the idea because it's hooking. I believe everybody was here to find out the holy grail of identifying an order block. But I'm sorry to burst the bubble. What you're going to be learning is not a holy grail. It's just a set of principles and concepts that works logically when you apply them. Okay, there's nothing holy about it. And at the same time, it can go wrong. That is if you don't follow the, principles. So it's just a concept, all right? And just like how every other system, when followed properly, it gives results. When followed properly, this gives results. If you're considering that as perfect, then it's fine. This could be the holy grail that you can call that perfect order block. But if that is not what you're thinking as perfect, as something that you can just go in with whatever way you understand it, and just because it was explained by me, or because it sounds perfect, and then that makes it perfect, I'm sorry, I am not telling you that, okay? So please, let's get that cleared, and then let's understand that we're going to be learning about some certain rules and regulation to spotting an order block, okay? So first of all, let me start. The concept of an order block itself, when you look at it from the institutional perspective, when we say we're trying to follow the blueprint or the footprint of what we read from the chart, we understand that it's basically talking about a certain order which is getting filled in the market somewhere, somehow. So the concept is basically talking about how the word goes, like the literal meaning of an order with a block, not the symbolic meaning of it, which is the symbolic concept of a bullish and a bearish candle, you know, one engulfing the other. I believe everybody already have that visualization in their head. Okay, so the concept of it goes into an order being filled, a very big order being filled that moves the market with a high momentum. So the candle that is bullish, the one that goes to engulf the other one, which gives the visualization of an order block, is simply just an order that is filled up with momentum. So a certain institution or a certain body of corporation took filled an order of maybe billions or trillions of dollars, and it, you know, moved the market in a certain direction. This is the concept first of what an order block is talking about. Then when you try to spot them on the chart, you have certain criteria as to how you pick an order block. Because as you can see, if you look at the candlesticks, orders are being filled on every block. So every block of candle is just an order. So every candlestick is an order block, if you look at it from this perspective. Okay, so every candlestick, that's why you see order blocks everywhere. And then when you talk about finding a perfect one, you're just simply talking about finding one that is reliable among these candlesticks, you know, of orders that are being filled. So when you want to find a reliable order block, which is just a block of order, remember, I'm just talking about the psychological aspect. When we go to the chart, I'll show you on chart, you know, what I'm trying to describe for you. But I believe everyone who have gotten a concept of, or who have looked at the symbolic representation of an order block, which is the candlesticks representation, should be able to visualize what I'm trying to say. Okay, so that we are talking about is the mentality of what is behind, you know, the concept of this order block trading in smart money. So when we say we're following the institutional footprint, it's basically trying to say we're trying to spot that area where the institutions placed those orders. So we look for order blocks. Okay. So I'm not coming to tell you about, you know, candlesticks and just that. This is the mentality I have when I'm looking for an order block. So I'm trying to spot an institutional order. So now the criteria as to what I use to spot them, or what I use to consider one valid, that I'll be showing you on the chart. Okay, so I will show you some certain order blocks based on the illustration I've made for you here, or the visualization or the concept I've explained for you. And then I'm going to show you what I use to consider one valid, invalid, you know, or relevant enough to risk my money on. So, bro, I don't know if you're ready to share screen. I can't see your screen for now. Well, so far, if anyone has any question, you can just raise up your hand, and you know, we can discuss about it before we get on the screen.
Okay, I'm on it, sir. I'm on it.
While we are on, I believe everyone is following up. There's no questions and all of that, since, you know, everything is cleared. As you can see from the diagram on his chart, he already identified what we would say an order block, you know, traditionally, an order block. So when you look at this now, let's discuss about an order block, criteria of an order block. Now, as you can see, if you look at the chart there, if you look at the chart naturally without what he identified, you can see that you can spot exactly the same thing here he highlighted everywhere. So you can basically spot another block with your own eyes everywhere. So what makes that one, which he highlighted earlier, more reliable than every other bearish or bullish candle? Okay, that's what we're going to be discussing about. Now, if you look behind the red line on the right, which is behind the other block, the one which it cleared liquidity from, the swing high there, you would see that he's identifying a certain criteria to why that particular order block was, valid, why that particular order block is considered reliable. Okay. And then if you look at the inner red line he identified, the one in between the mitigation, which I think is the liquidity he's identifying, is also a certain criteria to why that order block is preferred. Okay. And then the inner internal break of structure, we can see the internal change of character, which is identified below. So those are different concepts. But as we can see, those concepts add into the characteristics or the criteria as to why that order block is being picked. So that is an aspect. And all these concepts are within smart money. The concept of change of character is basically saying market structure is moving from bullish to bearish, right? So that's like a confluence to why that order block could be valid. Second concept, which is the concept of stop hunts, which is behind, is simply saying the order block just cleared out a major swing high, which a major swing high, we know that the concept of liquidity says there's liquidity above every swing high, right? So that order block clearing out that liquidity is also a confluence to why that order block could be valid, because that move was the last move. The green candle, which is highlighted, is the last move that cleared out that liquidity before the change of character was initiated. So all these other concepts around, this single highlight here, which is the order block, are simply things that add to why the order block is valid. This is the smart money concept of picking another block. This is the smart money concept of picking another block. Then we'll go into different types of order block, but I just gave you guys a breakdown of what he has on his screen. So that is another block, but that is another block being picked among other principles. Like I said, why the order block is working for you is not because I taught you how to pick a green and black candle. It's simply working because I gave you some certain principles, some certain criteria or concepts you are confluencing with the ideology or the concept of another block. Okay, so I think I just lost the screen. I don't know if it's just me, but the screen just went blank. But that's the smart money order block there. What we just explained just now is the smart money concept of another block. And when we now talk about different types of another block, or different reasons, or different ways to spot a mitigation, now there are different ways another block will get mitigated. Okay, what he showed us is an example of another block. There are different ways you can use to confluence the confirmation of why another block is valid or not. But when we talk about in the aspect of mitigation, same way we have different ways fair value gap can be filled. Sometimes price just fill the 50%. Sometimes it's the opening. And sometimes price just fills it completely before dropping. Those are different ways a fair value gap can be filled, right? Which is imbalance. But then, do you know that other block has different ways it can also be filled as well? You see? And that's also another criteria as to why or how you speak another block. Those are things that I personally consider as criteria, what you can consider a high probability order block or a low probability order block. Let me just give you guys a breakdown. There's the order block that gets filled to the opening, like the one he showed us on screen, right? You can see that just mitigated the opening. And then there's the other block that gets filled to the 50%. For those of you who have been following me for a very long time, you would know about my concept of the 50% of another block, right? And then there's the other block, which is known as the hidden base. I don't know if anybody have heard about that term. Okay, the screen is back. I don't know if anybody have heard about the hidden base. So I'm going to explain the concept of the hidden base for you. And as you can see, if you already know the hidden base concept, you can see that within that order block which is being highlighted, there's a hidden base below which is being mitigated. There's a hidden base which is between the opening and close of those two candles which the momentum came in for. That wick you see within the order block that first mitigated the order block there. I think the hidden base concept is also broken down within the neo support and resistance concept, which is the Malaysian SNL. The hidden base is also a concept that is very, very highlighted on that particular system of trading. Maybe we would have a mentorship on that in the future. But the hidden base concept is also a different type of order block. Okay, so as you can see on this particular order block, which he highlighted, the visible one, the last bullish candle that cleared out the liquidity before the change of character was initiated, that is the visible order block. Then there are two ways another block can be mitigated: on the opening or the 50%. There's a certain tool I use on my own chart to identify the 50% of another block. Bro, I don't know if you have that tool of premium and discount. I think was it the kid box? Yes, exactly. So this tool helps you to identify the 50% of the order block and the opening. You see, so if let's go back, let's identify a different order block, like the one which was broken, which is identified as the change of character. That is also another block. But as you can see, that order block did not clear liquidity below. The one which is highlighted with the black line below, that IPA candle.
This.
Yes. Could you highlight that with the same tool, the 50% tool? Could you highlight that one too? So I'm calling out that one in particular because I want you guys to understand that because you know how to spot another block, there's nothing holy about it. Do you understand? As you can see, that other block got a mitigation to the opening. And there's a different breakdown to that particular kind of order block. The one which you highlighted, which is looking at like a doji candle to the upside. Okay, that's considered an IPA candle. Inefficiency close price action, something like that. Or efficiency, if I'm not mistaken. But that particular concept is talking about another block on the higher time frame. That's where it's more clear. So you don't always get a Marabuzo candle. I don't know if anybody have heard of that word before. A Marabuzo candle. That's like the proper order block pattern. A full bullish candle with no major wick, and then before the momentum that comes in. So there's no wick above, there's no wick below. That's a Marabuzo candle. So that Marabuzo candle now is like the proper order block identification everybody knows about, right? But the IPA candle is showing you a wick previously, which is the one I told him to identify. So price goes down, bearish, and then comes back up. Okay, it goes back up, creating a wick below, like in form of a doji candle before the momentum comes in. So that's still another block, but it's in a different formation. As you can see, that one got mitigated on the opening before price went up. It didn't get to the 50%. If we go back much further, I think we could find some other block, like the point where price cleared that liquidity, the red line. The red line where price cleared that liquidity. If you look there, you could see there was a Marabuzo candle. So what I'm trying to show you is that the candlestick, the order block, can get mitigated regardless of market structure. Market structure is a confluence that is being added to the concept of order block. Stop hunt is a concept being added to the concept of order block. Change of character is a concept being added to the concept of order block. There are some certain newbies that just know how to spot order block. They don't even know the concept of market structure, all of that, and they think order block is the holy grail. So why I'm asking him to identify that particular order block now, the one just below the wick The swing high you identified that got cleared at, the one with the
Okay.
red line. Yes, there's another block internally that mitigated the wick there. Not that one, not that one, not that one, not the inducement. The stop hunt. The stop hunt before the order block was created. Yes.
Is this area?
The stop hunt, the red line, the stop hunt. Where you drew the red line from, not the, there are two red lines on the screen, the inducement and the stop hunt,
Yes.
right? So the wick to the right, to the left, to the right, where you drew the order block from, the clear, clear of liquidity from. Let me give you an overview. I just gave you guys the concept of an order block from the beginning. So types of order block formation. There are different types of order block formation. There's the IPA candle, which I highlighted for you, where price can either mitigate the opening or the 50%. That's not the Marabuzo order block, the IPA candle order block. Okay. And then there's the hidden base order block. That one is the wick itself, not the body, just the wick. So you see some people, they identify the order block, they identify just the wick, they don't identify the body. And then if you notice, the wick sometimes gets mitigated and then a new order block is created. Okay, so from what I was trying to get him to highlight. Okay, I see the screen is back. From the stop hunt behind the second line, what I was trying to get him to highlight, you can see that there was another block mitigation internally, that happened after price created the first order block. Price went back to mitigate the wick, then created, a trend down. That was how the swing high was created in the first place. So not the inducement, the stop hunt. Can you tap on the
Okay.
line?
This.
Exactly. That's what I'm trying to highlight. The wick there, just the wick. Highlight the wick
Okay.
to the full. Just the wick with that 50% tool instead, not just that one. Use the
Okay.
50% tool. So let's see where the mitigation happened.
This.
No, draw the full wick. Not like that. Draw the full wick itself.
Okay.
You're not trying to identify. Yes, the mitigation won't happen. You see, you can't identify that alone, because then it doesn't make any sense, because that one you're just trying to show that where price mitigated. But if you draw the full wick, you can see how perfect price mitigated the 50%, right? That's what I'm trying to show you. Because what you understand here is that the wick itself, but if you look behind, there's this Marabuzo order block there that looks like it was getting invalidated. I don't know if you can highlight that order block behind it with not the 50% to, but a normal, there's another block just directly behind that candle, the wick itself. Yes, the last bullish candle that cleared out the liquidity. If you look there, yes, that liquidity was cleared out by another block, but price moved to mitigate the 50% of the wick, looking like it was invalidating the other block before dropping. So if you understand what's going on there, you will understand that two other blocks are being confirmed at the same time. This is like trying to remember, the concept of another block is just talking about orders getting filled, right? So how is the wick another block? That's a question I'm going to also explain, because I told you there are types of order block. Now, could you use a red line to highlight the high that particular high cleared out? Yes, exactly. Just highlight that high. Yes. Now, the other block that cleared out that high, could you highlight the other block with the rectangle tool, not the 50%, just the rectangle tool? Exactly. Exactly. No, push it out further. Yes, push it out more a little. Exactly, just like that. Yes, just like that. Because yes, now why I'm doing this now is because I told you guys every candle is just doing order block, right? It's just orders being filled. Either orders are being filled, or we are having bullish or bearish market structure. Okay, so my price is moving in higher highs and lower highs, but the candlesticks are forming orders because the last candle before the momentum comes in is the concept of what? The order block. Okay. So now these are two different types of order block being mitigated here. But that is only if you know. You see, that is only if you know that there are different types of order block. Because now what makes the week an order block is if you go to the lower time frame, there would be a perfect order block at the 50%, probably not mitigated yet within that week. Because as you can see, this is on the 4-hour time frame. This is the logical concept of what makes that particular week valid enough that price could even be manipulated to mitigate that point. It's because on the lower time frame, an order was filled on the 15 minutes that is still valid. And this other block we are highlighting here are 4-hour time frames. So the concept of time frame is not neglected when you're still talking about other blocks. Okay, but when you spot different types of order block, you understand that certain manipulation can be done to clear out orders. Right? The reasons manipulations are done are either to fill orders or to clear out liquidity. Okay, so when the first order block, the one with the blue highlights, cleared out the liquidity, the week, as you can see, the bearish week that engulfed that particular green candle first went bullish. So let's say the volatility of the manipulation, the bullish manipulation, was still valid on the lower time frame that created that week before the major order, the major bearish order was filled that closed the candle bearish, that engulfed the green one below. That is the blue. So now, as you can see, if you observe the candle that shows like a doji immediately after the bearish candle there, the one in the middle, I don't know if you can circle that particular candle, the one that doesn't look like it has a body. Exactly, that one you just touched now. Maybe just cycle it with something. Yes. If you observe, you would also see that that particular candle did a mitigation there to the opening of the first order block, right? That particular candle did a mitigation to the opening of the first order block before the next candle was filled with bullish orders that went up to the 15, let's say 15 minutes or the 30 minutes. We are going to go and cross-check that, okay? Because everything I'm teaching you here is something you can go and backtest yourself. So we're going to cross-check that. We're going to look at the mitigation from the lower time frame and see where that price reacted from. But I'm trying to break down candlesticks for you because the concept of another block is based on candlestick, not market structure. Okay, market structure comes in with a different concept. That's why I told you guys that smart money concepts are a bunch of concepts you put together to make sense. It's not a pattern. Okay, this is not a single pattern because you see somebody draws another block clearing out liquidity, highlighting liquidity, break of structure, then you're going to look for just that. It's about the smartness, the way you can interpret the candlesticks, the orders being filled between the candlesticks, like I explained in the beginning about, the concept of another block on an institutional level. You're trying to break it down like you're trying to interpret. Remember, you're trying to follow the footprint of the orders being filled on the candlestick level. But why would that make sense? It will make sense because you're either following it in the direction of the trend, which is you already know market structure, and then you're also following it up with the concept of liquidity. Because now we know that things that happen in the market are market either moves bullish or bearish. That is market structure. And then market is either clearing out liquidity or another is being filled. So that is where order block and liquidity comes in. And putting this together is trying to interpret the chart. You're just trying to interpret what's going on the chart. It's not just looking at the pattern and putting all your faith on the pattern and saying the pattern works. It's not the pattern. It's the way you understand the concept and use those patterns to, make sense. Now let's I don't know, you guys can see the mitigation of the first order block there. So let's say if I was in a trade, or let's say if I was bearish on this pair and price was just mitigating that. Obviously my stop want to be above the week, right? But when we're talking about entries, sometimes you see the snipe entry is different from how the ratio, the risk to reward ratio is being displayed. That's simply because I don't use those things. You don't even see those things on my charts. I hardly use the risk to reward ratio because I'm not trying to give anybody any concept that I don't manually adjust my stop loss, or I don't manually manipulate my account. That's why I'm a human being. You understand? Sometimes I could see certain actions that maybe change my bias. If it was an AI, then I would say, okay, it's following a certain program, but I'm supposed to use my sense. So even if I have a certain arrangement, that's not rules. That's not the kind of rules you're supposed to have in trading. You're not supposed to say, because the risk to reward is like this, I'm not going to adjust this. Conditions of the market are bound to change at any time. The way you interact with your stop loss and your take profits is based on what you think is going on the market. What's your overall target? I was targeting $200. If I make the $200 before I hit TP, why would I close? What's the point of saying I want to hit it so it looks perfect, or I want to hit it because that was my initial target? That doesn't make any sense. Remember, your first aim of trading was to make money. You understand? So you're trying to make the money and get out, or you give it back. Do you understand? You're either, making the money and getting out, withdrawing it and investing it somewhere else, or you're making the money and giving it back because you think you can make all the money. That's not possible. Do you understand? That's not possible. You're going to get exhausted. And even if you choose to design a program or maybe give a bot, why I don't even preach about using bots to trade is because those are programs. The Forex trading algorithm is meant to adjust. So your program is going to get outsmarted because, as you can see, we are all human beings. I believe everybody here is human beings, and the world is evolving. So AI is getting smarter. So you should understand that the systems are going to also get upgraded. So the only way you could be able to maybe outsmart the system or use a smart money concept would be if you're using your brain and you're getting out and you're getting in manually, because the algorithm is going to get smart, and probably your program is not going to be outsmarting an AI designed to follow programs. Doesn't make any sense. How are you planning to use a model to outsmart something that was built based on models? You're only going to be a human being. Maybe the model has rules that the market is going to reverse after that swing high is cleared out. You as a human being knows what's going to happen next. Then what do? You clear your money out of the way and wait for the whole manipulation to happen. That was how I got my NFP trade yesterday. The one I shared with the channel. I wasn't trying to just, I was in losses. Originally, my first position was in losses because I entered earlier during the day. But I knew the particular place I placed my stop loss. My stop loss was a concept. If price break the swing high, the market is bullish. And when I mean price break the swing high, I'm saying if price closes above the swing high, then I'm out of this trade. This setup is invalidated. But until that happens, regardless of how much price looks terrible within that market structure, those are all lower time frame manipulation. And it was meant to kick me out. So I'm just going to sit put and then, watch the whole drama. And then what happened? Immediately when NFP came in, an hour before NFP, I noticed that the market was very slow. Momentum was not on the bullish side anymore. So the market was already overbought during the week. It was one-sided. Every pair was one-sided. That's one way you also predict the news. Once every pair is one-sided before a major event, you should understand that they are building momentum to move to the other side, because a lot of people will be holding their losses or they will be holding profits. So market is building up liquidity. That's within the concept of liquidity. If you know how liquidity works, you will know what's going on that aspect. This is smart money trading. Do you understand? Then when you move to another block, the other block is within the concept of market structure. So your stop loss and your take profit should be based on market structure, the swing points of market structure. That's the safest place, you understand, to place your take profits. To place take profits, if price clears out an external high, take profits. What's going to happen? Internal structures are going to get cleared out. So probably your entry might be an internal structure. It's best to take profits when the external structure is cleared, or you might end up losing that trade on break even or maybe on losses. Okay, so the concept of stop loss and take profit follows market structure. But understanding entries follows the different types of order block. Either you're getting an entry based on a hidden base, which is why we call them points of interest. You're either interested in that hidden base, or you're interested in that IPA candle, or you're interested in that engulfing order block, the Marabuzo concept I told you guys about. Okay, so these are all ways you find the perfect spots. It's not magic, it's logic. If you put those concepts together, or as you can see, I'm not using any manual to explain this thing to you, so you understand that I'm very, 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 very experienced with it to be able to, break it down like this. So you have to also be experienced with it to know it this way. You don't just, hop on one talk show and then the next day you know other blog. That's not how it works. Okay, that's not how it works. This one I'm giving you is just giving you insight. The only way you might know it the way I'm doing, I might just be good at explaining it and you're understanding it. It doesn't mean you know what I'm talking about. You have to experience it too. You have to look at people's charts that identify other block. You have to try and spot these criteria I'm talking about. When you see another block, what kind of mitigation is happening? And then you should understand that if an IPA candle gets mitigated on the opening, the 50% is still valid because the wick is still another block. But then hidden base candles are a different concept. I think that's also on my YouTube. Maybe if you want to look at that, you can go and check it out. I have all these concepts broken down individually. That's something I do regularly. So if you patronize the YouTube channel, you will know what I'm talking about. So those of you who already follow me, what I'm saying is not new. You understand? It's just refreshing because I'm putting two and two together and we're getting a compass to follow up with. So anybody has any question so far based on what I've explained? I think we have spent almost an hour here, but I've showed you guys different criteria and different ways you pick another block. Let's answer questions before we go to the lower time frame to see what happened on that 50% of that other block you identified. Anybody has any question, just signify by raising up your hand. And then we'll let you speak.
Okay, I think I have questions here. Okay, my first question is that you said the concept of order block is based on candlesticks. So we understanding how at the particular place that you spot out as order block, understanding how the candle plays himself. And okay, one thing I want you should just put more light on is when to use the body and when to use the wick. It talks about the APH and the hidden base concepts. So just share more light on when to use the body of the candle and when to use the wick of the candle.
Okay, that's a good question. And I think that question will come into when we go to the lower time frame. The clearance of that, I would explain that. And then, I'll touch on that too. I see somebody else also raising up their hand. Let's see if we can take that question, then we'd also know if that is also in line with this.
Okay.
Okay, I think you can now unmute the microphone and speak.
I already asked him to speak. Magnus.
Good afternoon. I can hear you. Good afternoon.
All right. Good afternoon.
Okay. Thank you very much for putting on this class. My question is, most of the class has been theoretical because of the network glitches. I would love it would be better if the speaker, the teacher, was the one handling the whole graphics presentation with his own computer. But in as much as that is not a possibility, I would love for him to do a real-time breakdown of the criteria in play. For example, now for an order block to be valid, you must clear liquidity. Okay, we know that. And then you said something about internal liquidity. Must it always clear internal liquidity? How would you know? Because I discovered that some other blocks, there are some imbalance. Maybe there's an imbalance in between the other block. Sometimes price go to mitigate that imbalance. It won't even get to the other block itself. Like it won't touch the open of the candle, whether wick or the body open. It will not touch the open of the candle. It will just mitigate that imbalance and come back down. Other times it will go for the open of the body candle, like the open of the body candle, or sometimes 50 of the entire order block. So I would have loved to see, oh, okay, now in certain scenarios, these are what the rules in place. Maybe the rules of spotting a high probability order block in place, so that we just see it per trade. I would have actually loved if the organizer of this talk show set out different scenarios where the different rules could be seen, so that we'll know the hidden games of smart money. So that's fine.
That's a nice one. That's a nice one. Okay. What I would do, we do know I cannot control the screen now, so that is that. But what I can do is that when the recording of the event is being edited, I would also add some images of some of these criteria. I'll write them. So when you're going through the recording, these things will be available on the screen, to make the class more understandable in terms of practical. But I think when we go to the lower time frame, I don't know how stable the network is. On the order blocks I have identified on the screen, as you can see, I'm doing them randomly. I will go to the lower time frame. I'll break them down as well. And then in terms of when you say criteria of how to pick a perfect order block, like the way you just explained now, the different ways of mitigation. Sometimes it's the 50%. Everybody knows that. Sometimes price doesn't even get to the order block. It's the fair value gap below. Sometimes price even makes a manipulation, clears out the order block before even going in the direction. That's something that happens. So when that's why I said something in the beginning. You might be thinking, because everybody thinks they know what they are doing, there's a holy grail that goes to certain criteria that could make the job easier. But I can tell you for a fact, it's a game of probability. You can pick a perfect order block. Remember, while I was explaining, I told you, even fair value gaps have ways which they get mitigated. You just have to be aware of it, because sometimes the fair value gap might be the one price reacts from, not the other block. It doesn't mean the other block doesn't work. Sometimes price could react for months without getting to the other block, and then all of a sudden the other block is what price wants to react for. You see? So it's a game of probability. Not because you have certain criteria doesn't take away that chances of, you don't know what's going to happen next. That's just life. That's just how it goes. If anybody could have been able to predict the market 100%, I'm definitely sure they would have capitalized on it bigger than the way I'm doing right now, because all I'm doing is just capitalizing on my own understanding to explain these things to you. I'm not saying it's certain, but at the same time, when you test them out yourself, you gain your own experience that, maybe makes it more logical to use than just using the pattern. That's all I'm saying. You understand? So why that is that, let me go into, I don't know, I can't see the screen anymore. I would have, loved
Okay,
to
I'll
go.
put on the screen now.
Okay, let's go to lower time frame. So in terms of practical, we can look into that, because that was meant to be the second part of the class after the questions. But I wanted to make sure everybody got the theoretical aspect of what another block was talking about, which I believe that is out the way. So let's talk about looking at the other blocks. So I highlighted different other blocks, but as you can see, the IPA never got mitigated to the 50%. But if you look into the momentum of the IPA candle, the one that made the internal structure, price created multiple mitigations on the opening and then went up. That's not a good spot. If the IPA candle had cleared out, maybe mitigated the fair value gap, that would have been, let's say, a confirmation that it cleared out liquidity. Remember, the concept of liquidity is different from other block. So that makes that other block a low probability first. So I'm talking about criteria of spotting another block. So what makes that other block internal is something that is based on market structure. What makes it a low probability is the concept of liquidity. The fact that the order block itself is resting directly above the fair value gap, and directly below the fair value gap, you can see another IPA candle there. I did not highlight that earlier because I was going to do it here because we're getting into the theoretical aspect. I wanted you guys to know what an IPA candle is, what the Marabuzo order block is, and also what the hidden base weak order block is. So when I say there's an IPA candle directly below the fair value gap, I believe everybody already can see it before we can identify the IPA candle, right? Yes, that's the candle. That's the IPA candle there. So that's not a proper order block, right? That's an IPA candle. An IPA candle that
Yes.
either the opening can get mitigated or the 50% can get mitigated. Okay. So that's an IPA
Okay,
candle
sir.
right there.
So I have a question.
Okay.
Can you just give us the full meaning of that IPA?
Okay.
What it stand for?
Inefficiency price action. Something like that. Inefficiency. Like the price action is not proper. It goes into the criteria of
Okay.
identifying the IPA candle. As you can see, every IPA candle has an inducement above it because of the momentum from the order that was filled. So you see the inducement above that. The one I also picked internally, can you see okay, let me say before the fair value gap. You see the fair value gap? The one the momentum made. The momentum that
Yes.
moved price up. Yes, you see that fair value gap there. That's a criteria to picking an IPA candle. Not just the formation of the candle. Look at the one I picked internally. I looked at the fair value gap too. The internal one that was getting mitigated that created, if you zoom in a little bit. As you can see, that one had a fair value gap originally when it was created before then the last mitigation that came in cleared out the fair value gap, right? So the price action is inefficient. It's not yet proper. There's an inefficiency there. So another word for imbalance is inefficiency. I don't know if you've heard somebody use inefficiency for imbalance. Some of you might have heard of it. But inefficiency is simply saying the price action is not balanced. That's why it's called an imbalance. There's an imbalanced price action. So the IPA candle is simply the candle before the imbalanced price action. It's the same place you find an order block, but the order block name goes into the concept of the Marabuzo candle. But the IPA is talking about the inefficiency price action because that can be spot without the clearing out of liquidity, and other criteria they use to directly spot another block. But the IPA candle itself is a momentum that comes in when an order is being filled. Right? You see the inefficiency there. Let's find another IPA candle, a valid IPA candle. And most of these lectures already have their criteria. They're already on my YouTube channel for those of you. And the first order block you highlighted.
Okay.
If you notice that if you were going to not pick it as another block and look at it from the perspective of an IPA candle, you can see that the black candle itself will be an IPA. You can see the imbalance that was created from the momentum, not the green one, but the black one itself.
The black one.
Yes. And then the opening of it was mitigated by the next candle where it created the hidden base. So let's say take out the 50% too of that order block itself. Remember, this is the type of order block. Okay, so identify not the green one, but the black one itself. Exactly. So let's say now you were taking this concept from the IPA, the full IPA candle. That's an IPA candle. So from the week where the next candle was created, you can see that candle came in to mitigate the 50% of that IPA. Now use the 50% tool to identify that candle itself. Use the 50% tool. Okay, so let's say you were looking at that as another block. Then the internal candle there did something. You see, but it came back to the 50% of that IPA candle. It's not a proper mitigation, but it's something. That gives you the insight that week that came in there, that week itself, that did that move to the upside to the 50% is a hidden base. Remember, there are three types of another block. Either an IPA, a hidden base, which is the week, or the Marabuzo order block itself. So if you highlight the hidden base itself, now that week, highlight that week that mitigated the 50%, push that blue tool down to just that week.
Okay. This.
So do you now see now that now if you look, you see that the week itself was the one that actually got the mitigation, not the other block that we were highlighting in the first place. That's just a basic concept of another block. Now use the 50% tool to break down that week, like how you do an actual order block. Now zoom in. This is all refining. This is what they call refining. Do you now understand what I just broke down for you?
Yes, sir.
So I just broke down 3 different types of order block on one point of view. This is how you refine your entry to a certain confirmation where you say, okay, I'm certain this is where I'm going to place my entry from. And then for a safer SL, some people, some smart money traders, that's why you see them, they might place their SL above that week there. And then they call it a sniper entry. And I mean, I'm not saying you can always spot this good, because obviously you can see that I have a lot of experience. I'm just breaking it down on a basic level for you to understand what another block means. But if I was doing it on the charts, using my knowledge to defend my money, I would have just refined it to this point, which I just showed you here. And then obviously, now put the risk to reward ratio on that. Put the risk to reward ratio on that. Let's say you entered from there. That would be where I will put my SL. You see, that would be a safe SL, right? But some people will refine this down to putting the SL above the hidden base. Put the SL above the hidden base. Now, do you see now how those people get those sniper entry? That will be a 15-minute trade. Remember, the hidden base itself is a lower time frame order block. Now, stretch the reward ratio to go clear out the swing low. Do you now see how we use smart money concepts?
Wow.
Now do the same to the IPA candle there. Let's say you traded from the 50% and then you targeted the hidden base. Your target was the hidden base there. That would be that your trade was price mitigated the 50% of the IPA candle, and then you're riding the trend to mitigate the hidden base there. Remember, you're just trying to interpret the chart. And I'm giving you a storyline to what is going on every price action. That's like interpreting the chart. So your obviously your SL will be below the IPA candle. So the SL below the IPA candle, the entry at the 50%, and then your TP would be, let's say, clearing out the inducements. You see, it's all about reducing your risk to reward. And also, even if you paid attention to the internal IPA candle there, the first one that did the internal mitigation, you would also realize that there was liquidity below that. So there's every chance that could get cleared out. Right? So that's not reliable, even if it's an IPA candle. So there are certain criteria. What makes it reliable? You understand? Remember, if you're looking for an order block, you're looking for a point of interest. So the one we refined and refined and refined, remember, we're refining it on a certain point of interest. A point that cleared out liquidity, a point that is still within an obvious order block that was refined down to the lower time frame.
Yes, sir.
So let's go to the 15-minute time frame. Let's review everything we have been talking about. Let's see how efficient it is. Let's go to the 15-minute time frame. Look at this. Leave everything on it. No, leave everything. It's going to make more sense. Exactly. Now just go to the.
Yeah, I want to try to bring it to 15 minutes.
Or the 30 minutes. Or the 30 minutes is also still good.
Okay, did it here.
Now zoom in, just zoom into the entry points because we're on the 4-hour time frame. Okay, zoom into the first area of interest. The area of interest, not where we entered the entry. How we pick the area of interest, right? Now, if you pay attention to the hidden base, the 50% of the hidden base, can you see there's an obvious order block there directly on the 50%? Zoom in, zoom in. Yes, that one.
Yes.
That's why I say you should not delete everything. So everything makes more sense. It doesn't look like, it was fitted. Look at that particular order block. Did we refine it to the lower time frame and identify the 50% of it? No.
No.
We did everything on the 4-hour time frame, but at the same time, we were still correct on the lower time frame. Now go to where the mitigation was. Go to the aspect where we got the entry. And as you can see, the other block was mitigating the breaker block from the previous, the 15-minute structure there. And you can see how the entry came to the 50%. You see, I'm not saying I would refine. Now, please push the SL back up because I won't do that kind of thing. Let's not give anybody that. Yes, because I don't think that pips is even too much to say you want to play safe because there's no certainty. As you can see, there was fair value gap above the other block there. Remember, a fair value gap is a different concept. So I won't give anybody that perspective that I would reduce my SL to that low if I was trading it. This would be my proper SL, but that would be my entry. The entry is based on the order block there and the confluence from the 4-hour time frame. It's not based on just picking the order block on the 15-minute time frame, like picking another block on the 15-minute time frame. I'm drawing out the 50% of it. That's not what I taught you here. Everything I did was on the 4 hours time frame, but it made sense on the lower time frame. And that's how the market works because it's the same chart. If you're doing it right, everything will make sense. If you're doing it wrong, you won't want to even check other perspective because they would end up mess up what you think you're doing. And that's because you're wrong. If you're right, Wyckoff, Elliott wave won't be scary for you to learn because if you learn them, everything will confluence to the same direction if you're right. If you're right, using indicators won't be scary because even when you pick your position, the indicators will still line up. That's how the market is. Just the same market. It's just different approach. And if you're running from other approach because you think your approach is your edge, believe me, your edge is not right. Because every other edge, everything makes sense. They're all predicting the same thing. It's just you who might be egotistically thinking maybe what you know is the holy grail. And then maybe because by chance or by probability, you ended up, being right. That won't take you too far. Logic is the only thing that can take you too far when you do things logically. So this is a practical perspective. Remember, I was here to teach you guys order block, no liquidity. So I don't taught you how I use liquidity. But if I was trading smart money concept, I would confluence all these things together. I won't just stick to just the order block. Okay. Now let's go to the other entry. The one that mitigated the IPK candle 50%. Or let's do it on the 30 minutes time frame this time around. Let's see if it still makes sense on the 30 minutes time frame. Let's see that order block, the hidden base itself on the 30 minutes. You see why it's called a hidden base order block on the higher time frame? Doesn't mean it to be hidden on the lower time frame. It's supposed to not be hidden on the lower time frame. That's why it's a hidden base on the higher time frame. It's on another block, but it's hidden. And then on the 30 minutes time frame, you can see it's just an IPA candle. You see, you're just identifying an IPA. You can see the imbalance before that candle we identified there. That would be considered an IPA candle. And at the same time, that was still highlighting the 50% of the IPA candle. And if it's an IPA candle, what will happen? There is another block on the lower time frame, which were coming from the 15 minutes time frame, and there was another block there. Do you understand? But obviously, clearly, we cannot see the imbalance above the IPA candle as well. So that won't be that trustworthy, only because of the liquidity below. That's why I said I won't place my SL directly below that wick there, because that's not logical to me. But this is what I would do. You understand? So I'm just showing you guys from my own experience and how I trade. So now let's go to the other area of interest, the other The IPA that mitigated the 50%. Yes. Now, if you look at that one, you would see that there was also a hidden base on the 50% of that IPA. And that IPA candle is just a move. Now, on different concepts, let's say ICT traders, there's already an interpretation for this. Remember, interpretations are terminologies. When I say IPA candle, when I say order block, when I say CTR, or when I say ICT, or when I say MMM, or whatever I say, these are just terminologies. These are just terminologies. We are all interpreting the chart. But at the same time, the logic of these concepts are what makes it work. The logic is what makes the pattern valuable. The logic of it, which is the theoretical aspect we did on the first part, is what makes it work. Do you understand? So the same way, now let's go to the 15-minute time frame of that area of interest too. Let's view it on the 15-minute time frame. Okay, so you can see the place where we had the hidden base is now a visible order block. Can you see that at the 50% there was a hidden base there? Now it's now another block with an imbalance on a different time frame. These are confluence. Do you understand? This is what they call confluence. Now let's say we had refined it to just that other block at the middle there. Push down the 50% to just the other block at the middle there. Yes. Maintain the low. Just leave it like that, because no, don't push it that low. I won't do that. I would maintain the low because it's being refined from the 4-hour time frame. The IPA candles itself there is trustworthy. I won't do that. Maintain the low. Do you understand? You can do that and experiment on it. Go on. Let's do that first. But naturally, I'll tell you I'll maintain the low because that would be where I'll keep my SL. Do you understand? But you can also do that. Just push it to that one if you want to do that. Let's see. Now go back to that place. Okay, now you see what happened, right? And if you notice, the candles maintained the closing at the 50%, but there was multiple week clearing out, the stop loss, because the new stop loss will be below there. As you can see, why I say I won't do that. That's very risky. That's why I said the first time we shrink it that way, I was not trying to give people that perspective, because those are people trying to make their chart look good. When you see somebody showing you a chart like that, shrinks SL, 1 pip SL, 2 pips SL, those are just charts. It's not realistic, because you can't be certain, that 3 pips SL. What was that? You understand? That's not even realistic, because I won't do that. I'm refining from the 4-hour time frame, so I maintain the 4-hour time frame for SL because I know manipulations are inevitable. Do you understand? You can see how price did a proper structure, but multiple weeks cleared out the low before price went up. But if your SL was from the 4-hour perspective, you would have been safe. If it wasn't, you would have been cleared out, and then you call SMC a scam. So let's push it back, put it to the low itself. Let's look at it properly from there. Let's say we maintain the 4-hour low. You understand? Let's say we didn't shrink it this way or try to do like all those phantom traders and all those Instagram traders. Okay, now you can see how the 50% was maintained. So let's say my entry would have been shrinked a little bit to the 50%. You can shift the entry itself. Shift the entry a little bit lower to the 50%. Okay. This is more logical to me. This is what I would do. That's why I said I would maintain the SL above to make more sense. I always advise people, if you're going to use an SL, use the swing low. it's safer that way, than saying you're going to be trying to do something like to look like the Instagram guys or anything. You can always move to break even after a week of structure and take your screenshots. That's much better than faking it and showing people something that is not realistic. But this is how I would do it if I was to trade another block. And this is how the concept of another block would make sense. Okay. So so far so good. Does anyone have any question yet? I think we're about almost an hour or 2 hours in.
Okay. Anybody with questions?
Yes, anybody has any question, please signify by raising up your hand so we can conclude for the day. I think this is enough class section. So while we are on, so I believe
Anybody with questions?
I believe everybody is okay.
Okay, because yes.
Yeah,
Okay, someone with question.
Okay.
Florence, I allowed you. You can speak now. Florence, you can speak now.
You can unmute your microphone. You can tap on the screen, unmute the microphone before you speak, or we won't be able to hear you.
Can you hear me now?
Yes.
Okay, thank you for this time. Actually, Mr. J, my friend recommended me to you, and I've been trying to follow to learn from your videos or from YouTube. Like, I think I even chat you on WhatsApp a few days ago. I'm happy to join this lesson. I heard the presenter talking about Orderblock. Actually, it confuses me. If he can give me a few minutes to go back and explain what he was trying to mean by that. Actually, I apologize. I joined the chat room a little bit late. I was moving up and down in town, but yeah, I thank you for this time. And if the presenter can help me, just give me some small light on Orderblock, because I had him trying to mention about it. Thank you so much.
Okay, so basically that's something we already did at the beginning, but I think I can do a revision, as a summary to everything.
Yeah,
then I'm going to make sure the recording is out early. So let's say latest tomorrow is Sunday, tomorrow evening the recording will be out. So when you have a clearance on the video, it's going to make more sense, because I won't be able to do the practical breakdown on charts. Okay. But I can break down the concept of another block, and definitely from maybe what you saw from when you came online, it might make sense to you. And then when you watch the recording, everything will be clear, because the class today was all about Orderblock. We have been discussing about Orderblock since the beginning. Okay. So when I break down the concept itself, and then from the theoretical aspect, when you look at the video, everything will make sense. Okay.
Okay.
All right. So as a revision, based on what I explained to you guys, in the concept of another block itself, now everybody already understand the visualization, the picture. I'm not talking about from the video. From the video, I gave you guys 3 different types of another block: the IPA candle, the hidden base order block, and the Marabuzo, regular bearish bullish candle order block, the one everybody knows about. So I'm going to explain the concept of the bearish, the one everybody knows about. And then the hidden base and the IPA candle, I shared more insight and highlights on it within the video. So if you want to know more about those aspects, you can watch the video, and then you can go and watch the single videos on YouTube, the ones I broke down those particular concepts for, just them. But now the concept of another block, how it works is that it goes into the word itself, an order block. So it's an order being filled, you understand, on price. Because remember, the chart is being moved by fundamentals. Institutions are buying and selling, supply and demand, buying and selling at the same time. So bullish, bearish, bullish, bearish. So basically, orders are being filled everywhere. Bullish, bearish, bullish, bearish. But now, the concept is that there are some certain orders that are filled for some certain reasons, either to manipulate the market, to clear out liquidity, or to, move the market in a certain direction. So these orders now, we have pending orders left in them. So let's say we have certain areas that price is going to return back to take out those orders. Because, for example, if market was bullish and then it clears at a certain high, and then the manipulation was done and a massive money was, invested in that market, and then a big drop happens. So it will create a momentum on the price action. So that momentum creates that order. That momentum sometimes creates imbalance. That imbalance now leaves the previous candle empty. So it's like there's an imbalance there. Price has to fill up that imbalance back. So that's where the concept of an IPA comes in. So that imbalance there is like a hook, because the imbalance, the market is attracted to that. It wants to correct those imbalance. Those orders has to be filled, and somehow, some way it has to be corrected. And that's where we now use certain criteria, like the criteria I've been trying to explain to you, from the 50%, the opening, hidden base, to try and identify these order blocks on different time frames to be able to, get a perfect entry, or what you would consider a more reliable entry from this buy, sell that is happening every time. So the order block can be confluenced with market structure. So you now use the stop loss on a swing low, more trusted based on the concept of the order block you identified, like what I was showing, I believe you were on that class. Or you use, let's say, the concept of liquidity. That is when you spot the imbalance, when you pick the order, the order is filled, the imbalance was made, then you spot the liquidity to confluence it as a more reliable source to why the order block would hold or why the order block would not hold. Like the one I showed you guys, that there was liquidity directly below the order block. So that's like telling you that there's chances that price could stop out this order block to clear out those liquidity, those stacked up lows, those internal lows that are directly below it. So those are like criteria we use to confirm a more reliable order block or a not trustworthy order block. And these criteria are just simply trying to give you characteristics to confirmation to different kinds of order block, because order block happens everywhere. You understand? So when you see one that clears out liquidity and has the 50% open and then has liquidity below it, that's more trustworthy. You can say, okay, this looks clean enough to take my money on. And that's called smart money concept trading. That's trading with smart money concept, because you're being smart and you're trying to follow the blueprint of the institutions. Remember, you were not the one that made the order, but you can say the institutions made an order here based on the reactions you're getting from the data. Remember, candlesticks are data: opening, close, momentum, volatility, investments, interest rates. All those things are just what are being interpreted by the candlestick. So when you start following some certain patterns and some certain interpretation like this now, you're indirectly trying to predict the movement of those, institutions based on the reactions of the candlestick. Previously, it was line charts. So individuals use line charts to understand the statistics of a company, right? So they use line charts to understand the interest rate and all of those things. It's all lines. But candlesticks give you more insight than line chart, because line chart doesn't give you an internal opening, an internal close, opening of every hour, every day, and even give you the perspective of different time frames, except you're doing it on a very advanced technology. But candlesticks can give you all those insights on one particular time frame with an opening, a week, and the body itself. Those are all data interpretation. So when you're using smart money concept on candlesticks now, it's kind of like trying to interpret what the institutions are doing based on candlesticks. It's like using, when you hear this remote viewing, I don't know if anybody have heard of that. Remote viewing is basically, you're not there, but you're trying to use what you're seeing to picture what's going on there. You understand? So what you're doing in trading, you're not certain about it, but you can predict a lot of information based on the data you're getting. The day, the week, the monthly, all those things are informations. So when we're trying to trade, we're trying to use technical concepts like this now, technical analysis with our mentality. As you can see, the difference between me and you is that I have more insights about the technical aspect of this stuff. And then I'm breaking it down for you. You're also understanding. Then when you practice them, you can then understand, you can then, develop the ability to read the charts the way I do. So order block is just a concept within smart money. It's not the pattern. The pattern itself is simply a type of order block, which is the Marabuzo type I talked about in the video. And that particular type is very rampant because It's easy to spot with stop hunt and change of character, like I showed you guys on the earlier aspect of this video. But when you start talking about hidden base, IPA, and all of those concepts now, it becomes more difficult because those are more advanced understanding of order block. You're talking about different types of order block, not just a pattern. So the IPA candle can still be an order block, but if you're not used to the concept of the order block, you might see an IPA candle as something else, and you say, that's not correct. But that's still another block if you look at it from the perspective of the concept. And that's what another block is all about. I don't know if that was good enough to, if those who were in the class earlier, if that was like a summary of everything we've been talking about, you can just, signify raising up your hand, and then, we can encourage him to watch the recording when he's out. All these things are supposed to be characteristics to your setup, not to spotting another block. Another block should also be one of the characteristics, because you can look at the market sometimes, you don't see another block. You can see something else. Maybe it's just an imbalance or a breaker block. So when you try to put a certain power, or let's say a certain belief that another block is all you need to know, or you need to have a certain criteria to just spotting another block, you limit yourself to the possibility of confluence. And then when the other block doesn't work, you end up telling yourself that maybe trading doesn't work. But you forgot that you belittled the whole system into just one concept and decided to force that concept to work for you because maybe you're lazy, you don't want to learn more, you don't want to spend more time studying, or maybe you're not lazy, but you just don't know a lot of things and you don't want to spend time learning. Because, for example, I'm not going to go to the chart and force myself to see another block when I know how to spot a breaker block, and what I'm seeing on the chart is clearly a breaker block. But at the same time, I don't expect you who doesn't know what a breaker block is to see what I'm trying to tell you or what I'm seeing without me showing you, because you only know order block. Do you understand? So there's no, when you have that mentality that when you have an edge, means you have a concept, you have put yourself in trouble. Your ego is just the one speaking, because you're beginning to think that you found that holy grail, you can stop learning. Learning never ends. There's no holy grail. There's nobody with 100%. Everything you're learning should be confluence to your own. You should retain your mentality, your beliefs. Retain them. Don't think anything works. Instead, just look at everything as an experiment. You're going to go and experiment the other block. If the concept doesn't work on the chart, maybe you try it out on the demo 4 or 5 times, it worked. You tried it on live, it worked, but it wasn't reliable enough to give you the results you're looking for. Okay, go and learn about liquidity. When you learn about liquidity, add it to how you used to trade the other block. You confluence both of them together. Is the win rate now higher? It's not. So what can you do? Add smart money concept, which is maybe the concept of premium and discount. Now you know order block, liquidity, premium and discount. If that increase the win rate, now if you're looking at it from a technical perspective like this, you're not going to get confused because you never saw the order block like something you had to memorize. You just saw it like a concept you had to learn. And now, since you know that, you can learn other concepts. But when you try to stick to just one pattern and you memorize like a scripture, you force your brain to start looking at just that pattern. You don't look at the charts the way it is anymore. You go and look for what you know, because that's what the brain is taught. So psychologically, first, take that mentality off that anything is certain. I just gave you an illustration. Okay, let me even give you guys one insight that I got recently. Not related to trading, but how uncertain, a certain thing can be if you look at it from a logical perspective. So I had this friend and we were discussing, and he gave me some insights to some research he was making. And then he discovered that the heartbeat of a human being is different from when you first took your first breath. So technically, I'm just saying your heartbeat doesn't come when you were born. Your heartbeat came in few months after the baby. The whole conceiving happened. So the heartbeat came along the way. So it's like a signal beat that came into the baby, while it was in the mother, and then it's different from the air that was first, that the baby took when he was born. But at the same time, what we're trying to say is that the heart itself is a signal, and that's what time measures. So when you look at the time every second is supposed to be every heartbeat. So when we age, we don't age based on time. We age because time is measuring our heartbeat. So when you say you want to put your time into something, you're indirectly saying you want to put your heartbeat into it, because the heartbeat is what keeps you alive. And when it stops to beat, the body stops to work. So it's like your time on earth was already calculated mathematically before you were here. And then if binary is 0 and 1, and those are bits, then what are you saying? What if every religional concept is just a concept? And then there's no heaven and hell, and God is just a great scientist and something like that. But this is just a manly discussion. Do you understand? And that's to tell you how everything could just be a probability. The point is, are you making the best of it? Are you having fun? And how much are you learning? You're not supposed to stick to anything and try to force it to work. If this doesn't work, go and learn more. Do you understand? But when you limit your brain to thinking you should just know this or go and look for another block and then you make money, and the possibility of confluence is thrown out of the window. What if you understand the concept of Christianity, Islam, Buddhism? How would life be? And look at it. Everybody's using just the right hand. What if you know how to use the right and left hand the way you use them fluently? What will change in your life? What will be the difference? Is that not something to know before death? Yeah, I'm just saying that's how uncertainty everything in life can be. There's no certainty to anything. So I'm not going to tell anybody that there's a holy grail to picking another block when I know that even life itself, there's no holy grail to live in. You just have to live, So you can't anymore. And I think that's the mentality I use in trading that keeps me going, because I don't try to force anything to work. I just look for what I know, and I make sure that what I'm saying is logical. Everything I'm saying here is logical. I'm not trying to force any pattern or any model into action. You understand? So that's my mentality towards picking anything, whether another block, breaker block, fair value gap, market structure. I know that for a fact I can be wrong. So even if I see some things that are not right, I'm willing to adjust. And everything is just confluence. You understand? So that's how I trade. Hope that was helpful.
Okay, yes, sir. Thank you so much, sir. Thank you for the word. Thank you so much. I really appreciate. And also, okay, I think this is almost that's 1 hour and that's for 3 minutes. So she'll be coming to an end. Okay, in the absence of no question again, thank you so much, sir, Mr. John, the founder of JayForexHouse. Thank you so much for the word. Thank you so much for showing us. Thank you so much for the wisdom. We really appreciate. Okay, and
It's fun to be here too. So it's very fun. All right. So I think that will be all. Thank you all for the opportunity as well. I also want to thank the host for coming up with great ideas like this to have events like this. Me, I'm open to collaborations, because as you can see, forex trading is not just something you do for fun. It's a craft. To me, it's a way of life. It's something you can use to understand every perspective to what you're doing. You understand? It's something that could make your mind go wild. And I believe that that's part of the experience of living every day. So I'm not trying to find God, because that's something everybody is trying to do. Majority of people, sorry about that. Majority of people is trying to look for God. But when you try to live because you're living because God gave you life to live, life becomes more fun. You're not trying to run ahead of your time. And then if you look at yourself and you say, okay, I'm way older now, I'm not, that young, then stop behaving like a child and start learning things. Know things that an adult should know, and then use that to scale through life, because everything is in history. Understand? And if you study history, you should basically understand what's going on in the world, and a lot of these distractions won't give you that stress to want to go and find quick money in forex. Rather, you're going to instead focus on the experience and trying to learn from life as you experience forex trading. So everything I'm doing basically online, everything I'm doing online as a character is simply to give people that context as a content that Forex trading can be educational. It can also be spiritual if you want it to, but that is up to you. It's not something that was dictated by birth or something that was dictated by your society. It's something you spend your time on, and then you learn from your own experience. From the knowledge aspect, it's very, very fun. Yes, you lose money, but once you start taking it for fun, you make more money than the money you lose. You understand? It's when you have goals to the amount you want to make or how you want to make it, then you start giving yourself limitations, because money comes in different ways, and making money is just a craft. It's not something you are supposed to run to. It's something you're supposed to attract. And I'm just trying to help people see that perspective too, so they can start fixing up things. So if you don't do any work, listening to this might not even change much. Definitely to change something, because you now know something, but it will not change much if you don't put in your own actions. So that's what I have to say. And maybe next time we'd have a section like this to discuss more. All right. Thank you, everyone. See you next time.
Yeah. Thank you, sir. Okay, so that's the end of the talk show. Thank you so much for everyone that joined the talk show. Thank you so much. And you guys need to know that trading is not about doing more. It's about doing the right thing at the right time. So like a sniper, you must master patience, precision, and discipline. So learning to identify and wait for the perfect order block or the high probability order block, as we have learned today, and the type of order block has been mentioned, and how to spot those order block has been mentioned. So you need to wait both your patience and your precision, and more also your discipline. So thank you so much. I really appreciate everyone that joined. Thank you so much.